Critics of Tesla have claimed that the company was a complete bust in Q4, but they fail to see the bigger picture. We have every reason to believe that this is the quiet before the storm, a massive $300 spike in the price of Tesla shares before we reach that point, because the company is performing as well as it should be going forward. While a number of experts have criticized Tesla for its Q4 production and delivery numbers not meeting the consensus of Wall Street and other financial bodies, make sure to hit the like button and subscribe. These figures were recently released by Tesla. While the market was down about 8%, Tesla saw a year-over-year increase of 40%. Therefore, Brett Winton, an investor from Cathie Wood's ARK Investment, appears to be right when he says that the automaker's Q4 deliveries were not a bust. According to his predictions, the majority of the auto market will be made up of electric car sales over the next 5 years. By 2027, there will be about 60 million electric vehicles sold, with a significant share coming from Tesla. Elon Musk's controversial behavior contributed to the decline in the price of Tesla's shares last year, but the company also faced, and continues to face, concerns over the market for its automobiles. Has been speculated by some investors that Tesla has a demand problem, particularly in the vital Chinese market, as a result of the recent price reduction for its EVs in this and other EV markets in the last 3 months of 2022. We have been made fully apprised of Tesla's progress. Vehicle deliveries increased by 40% year-over-year to 1.31 million, and production increased by 47% year-over-year to 1.37 million, as reported by Tesla. However, a consensus of analyst estimates compiled by Facet stated that Wall Street was expecting Tesla to report deliveries of around 427,000 for the final quarter of the year. Several commentators have stated that the decline in demand for Tesla vehicles is becoming more apparent following the release of Q4 production and delivery numbers. But the head of research at ARK Investment Management, Brett Winton, has stated that rather than miss, Tesla's Q4 numbers are groundbreaking. And he added that with higher production rates in the next quarters, this could spur the stock price to go as high as 400 this year. Despite a drop in production at the Shanghai factory in China, Tesla still had a record-breaking fourth quarter. This was even though Tesla had canceled the morning shift at the factory and told workers they could begin their break early. Gigafactory in Shanghai is Tesla's most productive manufacturing hub and has even become Tesla's exploitation hub, as the automaker produces vehicles for international markets, especially Europe and Asia. So a stop in production would have significantly impacted production in the fourth quarter of 2022. However, the car company's February numbers in China are out, and they confirm that the Gigafactory in Shanghai is maintaining an incredible output of more than 600,000 vehicles per year. However, Brett Winton believes that whether Tesla hits its growth target as a function of production and not demand, even though Tesla's demand may be failing because EV buyers haven't yet concluded that their decision to buy is due to tax credit on some of their cars, this will eventually pass considering the several price cuts that Tesla is doing in most of its markets. So rather than waiting for another incentive or for Tesla cars to qualify, it could be cheaper to buy the car due to the cost reduction. Deliveries of Tesla vehicles are no longer a reliable gauge of the company's success. Rather, they are merely one aspect of the company's financial performance. The final result may differ based on a number of factors, such as the sales price of the vehicle mix and exchange rates. According to Winton, Tesla is leading the industry in the transition to electric vehicles by 3 to 4 years. The automaker will also keep cutting costs as it ramps up production, rolls out new models, and launches new products in the years to come. As a result, Winton believes that the company may soon be able to sell every vehicle and product it makes in addition to the Model 3. The automaker is discontinuing production of a new model that will cost about half as much. Musk disclosed in October 2018 that the next-generation platform will only cost half as much as the current Model 3 and Model Y, which has increased expectations for the new platform, even though the project has been delayed and may not be completed for the next few years. Although the precise release date of the electric vehicle is yet unknown, Musk has declared that the car's production volumes will greatly exceed both the Model 3s and any other Tesla vehicle's manufacturing amounts. The adoption of manufacturing innovations like JITterpress, which casts big, easily observable parts in one piece, is to blame for this. According to a news release released by Tesla, the Investor Day, when it will unveil the new vehicle platform. Investors will also be able to witness the company's most advanced production line and learn about Tesla's future growth strategies during the 2023 Investor Day, which will be streamed live from the company's Gigafactory in Texas. Brett, the Tesla bull, had previously voiced his thoughts on innovation and how this can be a significant edge for firms. Wynn believes that if Tesla can successfully build this low-cost EV, then it will go again and set the benchmark for the EV market. The company also stated that it would discuss capital allocation at the Investor Day, which may include the stock repurchase plan that Musk first revealed in October. According to Wynn, investments in developing areas and innovation were also emphasized. He believes that if Tesla can master self-driving technology, it will be a game changer for the company and increase demand and stock price in the long run. Tesla has a lot going for it in the years to come. Although the present uproar has nothing to do with Tesla's operations, former Wall Street analysts and current Tesla bull Gary Black concur that the stock is currently cheap. It makes sense that investors are concerned about how well the company's items will sell. Could drop due to price declines in a number of markets and the stock's subsequent climb on the chart. Investors have lost faith in Tesla. However, the business still has a long way to go before reaching the levels that are reasonable after trading closes on January 25, 2023. Tesla is going to release its financial figures for the month of December as well as for the fourth quarter. Even while it is optimistic to expect more production from Tesla in the upcoming month, it is crucial to remember that the current perception of a decline in demand may not be totally unfounded, because the automaker is probably planning to enter club productions in China, one of the biggest markets in the world. Due to locally hidden manufacturing enhancements that, despite recent setbacks, are on the horizon, Tesla is progressively heading towards an even higher rise in cars in transit at the end of the quarter. With the ramp-up at its plants across the globe, Tesla could soon be able to produce more than 1 million vehicles annually at the Shanghai factory, and the business could record even greater production rates overall. As an illustration, consider the Tesla Giga Shanghai. Delivery trucks and hauliers are storming the factory as Tesla Giga Shanghai is getting ready to ship vehicles to consumers and quickly resuming production. Giga Shanghai manufacturing slowdown allegations surfaced late last year, shocking many with Tesla's customary end-of-year production and delivery efforts. The carmaker explained the stoppages and said it was producing annual parts. After line upgrades and optimizations, light maintenance personnel were able to take a break and complete this maintenance. A recent video posted by drone operator Wu, who has been tracking Giga Shanghai's development for several years, claims that Tesla is starting up at full production pace again. It appears that Tesla is increasing production and manufacturing to get back to normal before taking its purportedly planned January 20 to 31 break for the Chinese New Year. A report states that the Giga Shanghai will be open from January 3rd to January 19th. These dates have not been verified by Tesla. Since employees are busy producing the Model 3 and Model Y all-electric vehicles, it is clear from Yua's most recent video that Tesla is making the most of its operating days in January. The quantity of car haulers positioned outside the factory, awaiting the completion of vehicles and their subsequent loading for transportation, was even more remarkable. Wu, a drone operator at the Giga Shanghai plant since 2019, provided some insightful remarks regarding the quantity of hauliers on the factory's grounds. That pretty much covers everything in this video. Do you concur with this evaluation? If so, do inform us in the space provided for comments below. While you're at it, give Tesla a rating. Remember to click the notification bell and subscribe. We appreciate your time, and we'll see you in the upcoming video.